Welcome back for another top-notch video. This week, guys, we'll be talking about the week of February 17th through the 21st. Getting through this month of February. As always, this is the top-notch channel. We are currently ahead of all markets. We are beating all market TSP funds, doing very well on this channel. If you're wondering what this channel is about, we go over some of the funds for Roth IRA, brokerage accounts, TSP. We go over all of that and we kind of compare it to the market and see where things are going. Then we make a final decision of where things are going in the future. So if you're a TSP investor, we go over the C, S, I, and F funds, and those correlate to the ETFs. If you're Roth IRA or brokerage accounts, IVV, ETF, VXF, EFA, and AGG. And you might be wondering what these ETFs equal, and they are equal to the S&P 500, and these two are equal. These the small S fund or the VXF is equal to the small caps. EFA or I fund is international, and the F fund / AGG is bonds. That being said, where are we sitting on the top-notch channel? Been tracking our percentages very closely all the way up through February 20th. Within February 20th for the month, we are sitting at 1.88%. So doing very well for this month. Overall, for the entire channel for this year, we are sitting at 5.82%. So sitting up very, very well for the markets, above all markets for the year. Doing very well, like I mentioned. Very happy for where we're standing on this channel. Please stay tuned. We kind of do a general overview, some market analysis, and then go into more specific technical analysis, and then finally give you our overview of where we are going. So let's dive into that just a little bit. One of the sites we'd like to use is TSP Talk. On TSP Talk, they give the funds and what they did for the week. So as you can see, we have the F, C, S, and I funds up here, and that correlates to those ETFs. With it for the week, guys, as you can see for the equity funds, which is our C, S, and I funds, or EFA, IVV, and VXF, we were down quite a bit. Down week for most of our funds. The S fund didn't pull that much of a loss, but other funds were over a percent loss, guys. That's a pretty significant loss for markets. As you guys know, we had a pullback a little bit earlier on, kind of a little correction earlier on towards the beginning of February, and it popped back very, very suddenly. You can see that in the monthly charts here. For the month, we are up almost 3 and 4% for the month, so this little pullback is not much. But if you guys were considering getting out, trying to catch this, it's probably already passed. I wouldn't consider even trying to catch that. Overall, for the month, though, we are sitting very high for these, very, very good. And as you can see, for the year, we're sitting at 3.5% for the C fund and almost 4% for the S fund. That does not come close to what we are doing on the TSP channel. We are 5.8%. So we are beating all market funds at this time, like I mentioned. As it looks for compared to Top Notch versus everybody else on this website, this TSP channel, or TSP Talk, which is a very good website. Like I said, check them out. We are sitting at number 13 on the list. That's very good. Been in the top 10 for a number of weeks. Dropped back a little bit. That was mostly due to having our allocation for only in the 70% F fund, and then we were 10% C and S. The reason we did that is we only get 2 moves a month. This was our second move. We didn't want to lose out in case markets did decide to go higher. They did decide to do a little pullback here, so that was good. We mitigated our risk from that nasty pullback on Friday. We only took a very small, it was a very, very small correction compared to most people on that. As you can see, some of these other guys that are sitting in the S or the I, they took over a percentage loss. We only took 0.4%, 1.4% loss. Very, very little compared to everybody else. We might move the rest of our funds out of there to try and catch the rest. Hopefully we have a down week, but like I said, early February, markets for the first 2 days just blew 3-4% in 2 days. So it's very hard to catch these markets when they turn around. But overall, we're very happy where we're sitting. Number 13 on the list at over 1,000 accounts, 1,100 accounts. So we're doing very, very well in the top 13 here. Feel very good at where we're sitting. As far as a chart perspective goes, this is the week, guys, if you'd like to see it on a chart. Overall, we saw a little raise towards the beginning or the middle of the week. We got out right around Wednesday. I think 18th or 19th is when we got out, put some of our money in the F fund. And sure enough, on Friday, we took a major hit, which brought our equity funds into the negative for the week. Overall, that S fund did do very well. It was above, it was 50, went up 0.5% for the entire week, so we're doing very, very well there. Now we're going to kind of go over some just very technical analysis things, kind of show you guys where we're sitting at. I'm going to do that with some pictures. Ciovacco channel on YouTube has the same information. He puts it out. I just like to emphasize on it and kind of go over my analysis with it. One thing he brought up this week was ADX. Typically with ADX, we don't, like he mentioned, they don't use it as a timing tool. They use it as kind of a broad market tool of where things are going in the future for long terms for those guys that are buy and holders. With ADX, guys, here's a number of charts that shows December 1936, May 1946, 87, 2000, 2015. As you can see, ADX, that black line is way above the red and green lines here, and he pointed that out in all cases. And then down below, as you can see, 82, 92, 2004, 2010, and 2016, that black ADX line is below the green and red lines in every case. Where do we sit today and what are we looking at? Usually when ADX is above these lines, we tend to see markets move in a downward trend, longward trend. And usually when it's below these, he calls it a sleepy trendless market. So where are we sitting at today in 2020 with ADX? This is a great chart. This is the same chart here, guys. As you can see, right now for black ADX, we are below that green and red line. We had a big move down in 2019, got back below that. That's where we want to be sitting at. Being below that, guys, is very good because guess what happens next in the markets? When we look at that, what happens next in our markets when ADX, that black line, is below? Typically, when it was below that, or where we are at now with some of these cases that we're seeing, where the S&P started, where the S&P ended after the major peak. Here you can see the gains here, so 82 over 1,000 gain, 274% gain, 40%, 186, and 55. What was the average gain of that? The average gain of that, guys, from those periods was close to 344%, and it happened over a period of about 8 years. Okay, so here's the days. Calculated into years, it's about 8 years. That, guys, is right around 30 to 40% a year. Now, granted, markets go up and down. Some years will be better than others, but averaged about 38 to 40% for that 8-year period. So we could see a very good period coming up for the next for this decade, guys. This could be a very, very good decade to be investing in stocks and bonds. So very interesting to see that, his kind of perspective on that. Of course, you mentioned pullbacks and where we are with that. We will always have pullbacks in a market. But one thing is when markets are doing things like this and doing very, very well, what do our pullbacks look like? Pullbacks typically can be anywhere from 1 to 2 to 6% usually in a very good market. And as you can see, if you miss that dip on Friday, it's already past 1%, headed to that 2% pullback range. This is the 1%, 2%, 3%, 4%, 5%, and 6% range. You're already past that, and if our averages is a small pullback, I would say is maybe average to 1 to 2%. A big pullback maybe 4%, and then anything past that's more of a bigger pullback. But averagely, we see about 2 to 3%. So we're already halfway there, guys. So if you missed that on Friday when we pulled out of markets, it's not worth you getting out of markets. You might as well just hang on to your funds of where they're at. On the Top Notch channel, we did pull out a little bit, but once we hit this 2% line, that's it. We can't make a move, unfortunately, until the end of next week, so the 29th. But we're hoping that markets will stay beat down just a little while until we can get right back in. We want to get right back into those funds now that we got that advantage on the S&P 500 and the small caps with the CNS fund or VXF and IVV. So doing very well. Like I mentioned, this pullback could last maybe to the 2%. I would say 3%, but pretty rare to see that drop down, especially with a crazy market we got going. We might see some consolidation, guys, just because this has been a huge move since October. So we might see some consolidation in here moving forward, but we want to get ahead of these markets and stay ahead of them, not only for profit, but also it brings in a little bit more traffic to the YouTube channel. So that being said, that is everything we have for an analysis for these some of these charts here. Now we'll move more into our technical analysis moving forward. So the first thing we like to look at is IYY. Why do we like to look at IYY? IYY is a very good indicator of all stocks, all funds, everything in there. Mom and pop, big investors, small investors, big fish, little fish. That's why we like to look at this fund. When we look at this fund, guys, as you can see, we were at the very top of the trend line for quite some time. We were able to hang on to that for a while. Top Notch was in there for quite some time. Decided to see where that would go, if it would break out from there, if it would stay, if it would go down. We weren't sure, so we had a little bit of funds. We had 30% of our portfolio in equities, and sure enough, it did take a drop. What we did is we mitigated our risk on that. We didn't take that massive drop there. We're hoping maybe to see that hit maybe the 20-day moving average, but our last drop we ended up hitting that 50-day moving average before moving back up, and that is just some explosive growth. Look at that. That's maybe 2-3 days of explosive growth, and then just a little gain after that, right from the bottom of that trend line to the top. This is a very hot market, guys. So we got to be able to be, if we're going to get in and out of markets, we got to know when to get out, which we've been doing well this year, but when to get back in is more important. We got to make sure we're getting back in and not losing gains. So we're watching it very closely. Like I mentioned, we want to get in probably towards the end of next week. Hopefully we can have another down week. Hopefully it takes a little while to get back to this bottom trend line before we can get back in again for IYY. With IYY on a technical analysis on a long-term scale, we're seeing something really odd here, guys. Usually what we see with our indicators, the first thing we use is the derivative oscillator. We also use price percentage oscillator. Derivative oscillators, these green bars here, typically when they go down, we see markets tend to go down. Have not seen that here. Market, it's even in the red here, and we're still seeing price increase here. So that's very odd for the indicators that we use. And the price percentage oscillator has not moved below that moving average line. The moving average line is in red. Price percentage oscillator is in blue. Usually when blue crosses red, that's when we see charts that start to increase or price start to increase. Has not crossed yet, still above that, so price is increasing, but one of our two indicators is down. Is this a warning sign for the future? We'll have to wait and see. I'm not really sure where this will go. We have to look at a short-term chart, a more short-term chart, to see where things are going in the future, which we're going to do right now. So on a midterm basis for IYY, you see that price percentage oscillator finally is starting to kick down here. Did not see a cross just yet. Seeing the market just do a lot of indecision. Like I mentioned, I was also indecision. Not sure where to go. We see a spinning top on top and bottom. When we see that, that's typically people, investors, wondering what is going to happen next. We start to see that back here. Then we had a major drop back here in early February or end of March or end of January. So we'll have to wait and see where that goes. Typically when that bar crosses, we see that's when we start to see price drop a little bit. Derivative oscillator drops, we start to see price drop a little bit. This bar is officially closed, so we'll have to wait and see on that. Not really looking to be in equity funds when this is on its way down, so we'll have to wait and see on that. On a short-term basis for IYY, we are in the negative with the price percentage oscillator moving down, price moving down, and our derivative oscillator moving down into the negative. Looking for a good turnaround here to get back into equity funds. As soon as this starts to turn around, we will do so, but we're waiting for that to happen. So that's IYY. Now we'll move into our stock funds that you are all interested in, TSP and Roth IRA and brokerage funds. First thing we're going to look at is IVV. This is the C fund for TSP investors. IVV ETF for those that are in brokerage accounts / Roth IRA funds. Very, very good fund. Tracks the S&P 500. Where are we sitting at? Looks very much like IYY. As you can see, moving on the top of that market, we moved down towards the end of January. It barely touched that down in the bottom trend line or close to the 50-day moving average, and then bounced right up there very significantly, very quickly. Hard to catch that. We did catch the tail end of that, and we were able to take advantage of it just a little bit, but not as much as we'd like. Now with this second pullback here, we want to take advantage of this, so we have to wait one more week until we can get back into this fund because we already made our moves for the month. We only are allocated 2 moves in the TSP, but if you're in IVV, you can move back into it at any time. That 1% pullback is pretty significant. Like I mentioned, if you're waiting for 2%, you might never see it. So just be careful if you're trying to get back into this market. But one thing I would watch is the technical indicators for IVV. What do we got? IVV on a long-term basis, long-term scale. Like I mentioned, it looks just like IYY, guys. This is a very interesting. We are in the negative for the oscillators, but price percentage oscillators staying above. So that's just really interesting. Usually they tend to move together, so that's very interesting. That's why we're not 100% on equities. This could turn around very quickly, but if it decides to get nasty, we did move some of our funds. So we're just waiting to see what it looks like on some of the shorter-term charts, which I will bring up right now. With the 2-day chart or midterm basis, this chart is about to cross here. Didn't see that cross just yet. We got a spinning top on price. Our oscillator is moving downward. Our price percentage oscillator is moving downward, and we might see something like we saw towards the end of January, maybe a week or 2 weeks, maybe a week or 2 to 3 days of negative price action. I think we might see a little bit more of that, a little more consolidation, just because we had a crazy run from October, November, December, and January. On a short-term basis for the 4-hour charts, guys, we are starting to see this move way down here. We saw this coming towards the 19th or 18th of the month. We saw this crossover. That's when Top Notch decided to move some of its funds into AGG, and I'll show you our final allocation at the end of this video. And sure enough, we did see the funds move down quite a bit over the last couple days here. We're waiting for this to turn around, and then we want to get back in funds. We're hoping it'll be a couple days before it does so. Overall, not a place to have money on the very, very short-term basis. Long-term basis, still looking pretty decent. Moving on to VXF. VXF, it looks very similar. Hit that top trend line again like we did back in mid-February or January, and we're going to start to see that decrease a little bit here. Yet to be seen how far down that will go. I'm guessing it's going to hit something, some kind of resistance here before it heads on its way back up. On a technical analysis for VXF on a long-term chart, long-term basis, seeing that very similar here. One thing we're not seeing that was on the C fund or for the S fund, guys, we're seeing our price percentage oscillator. There you see it down there in green. It's at 0.16%. And then when we moved to this week, it was at 0.18%. That is on its way back up. If we see a weekly fake out here, we could see 3-4 bars of explosive growth moving forward. So we didn't totally get out of equity funds on the Top Notch channel, and that's one of the reasons why. If we look at it on a short-term basis, we do not see this 2-day chart heading back down. It's more in the positive, and the price percentage oscillators in the positive don't have as much indecision, more towards the upside than the downside on the price. So looking forward, we are still having some of our portfolio in there. That's why we have some of it in there if you ask questions why. And then on a short-term basis, 4-hour chart, we did cross with the price percentage oscillator through that moving average and our derivative oscillators in the negative. Yet to be seen when that will come back. But when it does, we'll most likely try to jump back in as soon as possible. All right, EFA, our iFund International Markets. With our iFund International Markets, look how messy this is, guys. It's been all over the place. If you've been in this fund for some of February, it's been all over the place. And if we look at it with for a yearly basis, iFund or EFA has been down for most of the year, guys. This is down 1.5%, doing worse than all of our other funds. This is the underperforming fund, not doing well at all, even doing worse than our life cycle fund. So not really a place to have money. Kind of waiting to see where it will fall, guys. One place we might see something is right around the 67.80 mark. We bounced off there once, we bounced off there twice, we might bounce off there again. We do have this trend line coming through here, and we bounced off of that once, so we're yet to be seen here. But we look at it on a technical analysis for a long-term basis for EFA, and as you can see on a weekly chart, we are in the negative here, negative here. Price percentage oscillator is below the moving average. Our derivative oscillator is in the negative, and our price is starting to react to that. Yet to be seen, but I think we could see a lot of consolidation moving forward. On a midterm basis for EFA, as you can see, one thing I'm not very happy about, guys, this derivative oscillator went from, in green, negative 1.34 to negative 1.36. That is a very bad sign. If we see a negative fake out, that can be lead to a lot of negative price action moving forward. One of the reasons EFA is down, I think, is due to the strong dollar action we've been seeing lately. And then on a short-term basis, as you can see, we crossed back on the 14th of the month with our PPO line. Our derivative oscillator has been negative, and prices reacted pretty significantly to that 4-hour chart. Try to stay out of EFA, guys. I'm not really a fan of that right now. If you know me and my history on this channel, I've never really been a huge fan of EFA, but yet to be seen if we might be able to find a jumping in point maybe in March or April with this fund. Finally, let's move to AGG or the F fund. With AGG or the F fund, we saw a ton of consolidation here, guys. Look at this. September all the way through the first of the year. Consolidation all the way through that from that big move we had in June. Once we saw that, we saw it start to move back up again, and it hit this top, bounced off that top, and now we are through that top, guys. So that is what once acted as resistance might now act as support. So we are doing very well with AGG right now. It's definitely counteracting some of our stock funds or our equity funds. The F fund is doing very well. On a technical analysis with AGG, we are looking at a long-term basis for the weekly charts. As you can see, this fund has been moving out ever since November 1st, coming up, up, up. Price never really reacted to that until we hit about this price percentage oscillator, our second indicator. Once we got that second indicator, we start to saw price really jump out for AGG or the F fund, and it has been moving forward ever since. Now the big thing is when we get these positives derivative oscillator bars, we want to start to be careful, start looking at those midterm charts to see when the trend will change. But right now, very, very good. One thing we saw with our Bollinger Bands is it's starting to stay in those Bollinger Bands. Like I said, charts usually tend to stay in the Bollinger Bands. If you look at it like almost like prices, someone trying to breathe outside here where there's no air is in here, it always has to come back inside those Bollinger Bands. But overall, we're sitting very well, just a little bit above the Bollinger Bands. Price percentage oscillator blue line above that red line, very positive, and our derivative oscillator is positive in the green bars moving up. Very good on a weekly chart, long-term chart. On a midterm chart, guys, we just saw a fake out on the 2-day bars. So back in February, we started to see that decline a little bit. We were a little worried about that, but on the short-term chart, it looked good. Ended up not being good. It was the 2-day chart or the midterm chart that really predicted what was going on with that. Started to see that move down, 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 and down, and then we saw a fake out, guys, on Friday. So that bar closed on Friday for our derivative oscillator. We went 1.65 on that green there on the bottom of that little chart thing that pulls up right there, and then we moved from 1.65 to positive 1.24, moving up, and price is reacting, guys. We want to be in this fund when we see fake outs. Usually fake outs last 1 to 3 bars on these charts. We could see that last for anywhere on a 2-day chart from 2 to 6 days. So we are looking forward to being in AGG. We are glad we are in some of AGG. And then finally on a short-term scale, guys, boom, look at this. We have a price percentage oscillator moving up above that moving average. We have our derivative oscillators in the positive green bars moving up, doing very, very well. And then we are within our Bollinger Bands. Price is reacting. It is moving up, and we are doing very well for AGG or the F fund. That is all of our funds. That's a little bit of analysis, guys. If you like these videos, please like, subscribe, or share. Really appreciate your comments written down below as well. Like I mentioned, Top Notch is above all markets for right now. Why wouldn't you want to subscribe? One last thing I want to add, guys, if we go back to our sheet here, as you mentioned, there's the SI and F funds or these ETFs that you can follow. We're going to move into our final allocation for Top Notch. As you can see, Top Notch channel is invested in the AGG or the F fund. Same thing, guys. We are invested in bonds. Mostly 70% of our funds with new allocations going into bonds. We did leave a little bit in VXF and EFA. I'm sorry, VXF and IVV just to see where those funds would go. So far, they don't look very favorable moving into this next week. We might move this stuff into the G fund just to protect it. But we didn't take that massive hit on Friday. Charts were down over 1%. If you guys have questions, concerns, or comments, please write those in below. And as always, that's another Top Notch video. We'll see you guys next time.